Hey everybody, with gold prices rocketing, the question is who's buying all this gold? A lot of people come to me and say, "Well, I don't want to buy it at the top of the bubble." Well, let's take it easy there. There's a reason gold prices keep going up, and they can keep going up for quite a while. So let's talk about this. The first thing is thinking about it from the bigger perspective, not just these individuals buying it, but let's talk about these countries that are buying gold, these big, huge stockpiles of gold that some of these countries have. Have you ever thought about, who's buying up all this gold or who has the most gold? We go straight to the central banking of several countries. First one right now has been Russia. For the last 10 years or so, Russia has been buying up tons of gold. And there's a very logical reason for why they've specifically been doing it, because they're using it to help protect against the pressure and instability of all the sanctions that have been put on them. Their currency was just in an absolute plummet when all those sanctions were being put on. You buy up gold, it stabilizes things. Yeah, stabilizes it at the bottom, but it does stabilize it. They've more than doubled their amount of gold that they have in reserves. They went from just over 1,000 tons to over 2,000 tons in that 10-year period, and most of it was in 2022, so actually more recently. Kind of follows closely with an increase of almost, well, it is actually a little over double as well. So 1,000 ounces to over 2,000 ounces and their main reason was diversifying out of some of their US dollars. Believe it or not, they are the largest by far holder of US dollars in their currency reserves, which traditionally is used to stabilize their currency. So they own a ton of US dollars. They're selling dollars, buying gold. Now, is it really making a dent? No, you'll see that real quick here. And then Turkey, Poland, India are the other leaders in buying up gold. That's just buying gold. So now let's look at why. Why are these countries buying gold? Well, central banks are increasingly looking to gold as a safe, stable asset to diversify their foreign exchange reserves. You look at the balance sheet on all these countries, they all own currencies, but gold is considered a stabilizing currency as a part of their portfolio. So it reduces their dependence on the US dollar and other currencies. It is that international currency, and you'll see this. All these countries are owning all this gold. That makes it currency. So these arguments of, oh, wait, what's the value? Well, it really is, from a country standpoint, looked at as that international currency. Safe haven assets. So we've always looked at gold from the safe haven side of this. During economic and geopolitical instability, prices typically do well on gold because central banks are buying up this gold. Okay. Then you've got to hedge against inflation. Typically, we see the value of gold going up when we see inflation. So we want to diversify our currency holdings, including gold, when we see inflationary times. Because if you're in a currency that is inflating, that means the value of that currency, the purchasing power of that currency is going down, whereas gold is a stabilizing factor in there. Reducing reliance on that US dollar. Some of the countries are just simply looking to diversify because overwhelmingly, when you look at their currency reserves, it's US dollars. We have a stranglehold on the globe with that power by all these countries having our US currency. So they are diversifying out of that. Not, again, a percent or two, not flip-flopping at this point. And then emerging market trends. The developing countries have really increased their gold purchases since 2008 as well. So, because that was not just a U.S. financial crisis, that was an event that shook the globe. And when the U.S. went down like they did in 2008 with their financial crisis, the dollar-backed financial system shook in their boots, let's just say. So who holds all this gold? That's just a picture of my safe right there. So who holds all this gold, right? So let's look at the top 10 countries. I'm going to loosely use the word countries, so you'll see why. India. India is number 10, 879 tons. 800. That's a lot, by the way. But it's only 8.2% of their reserves, meaning the rest of it's typically currencies. They own US currency. They own a lot of US currency. Japan, 933 tons. That's only 4% of their reserves. And if you understand Japan's financial system, they can't afford to have, it's not really an illiquid assets, but it's less liquid than cash, let's just say. And so they've got to have the cash, unfortunately. Switzerland, 1.1 or 1,146 tons of gold, 7.4%. China, there they are, 2,355 tons at number 7, only 3.8% of their reserves. They own an enormous amount of US dollars, and they're slowly but surely shifting it into gold. Russia just beating out China right now at 24% of their reserves. So they really rocketed what they had in gold reserves. France, 2,686, 66%. Now, when we see that 66%, that typically means they're fine with just sitting on it. They don't need it to pay debt or any silly thing like that. They're just sitting on it. And it is the philosophy of their country for generations before, as well as Italy. Same thing there. The whole idea of gold reserves comes from the European Union area and has fallen over to us in the later years, right? It's really the France, Italy, and what you will find out in the upcoming months. It is that European area that really relies on gold. It is a currency to them. International Monetary Fund, I put in there as number 3. Surprisingly, they supposedly own 3.1 or 3,000. I will keep wanting to say 3.1 million. No, 3,102 tons of gold, and supposedly that's mostly from the World War II confiscations and things that happened back then. But the reality is that's what they're reporting that they have. Germany, there they are at 3,696, and the U.S. wins with almost 9,000 tons of gold, and supposedly they're going to open the doors and it's going to be an empty tomb. But that's what we've always reported. Honestly, it's been a stagnant number for quite a long time. So that's who holds the gold. That's who's bought the gold. But we need to figure out how this relates to us. What does this mean to us, right? You look at what's been going on since 2010 in particular. Central banks have been net buyers of gold since 2010, meaning, there are some people, some entities that have been selling, but on the pluses and minuses, they've been net buyers. Okay, they hold these gold reserves to support their currency value, provide economic stability, and act as a hedge against market volatility and financial uncertainty. That's why countries with their central banks hold gold, right? So the central banks have then been buying since 2010. Russia, China, India, Turkey, they've all been leading the way on buying. Well, let's look at what's happened to the price. We had a bit of a dip from 2013 to 2019, but on the whole, it has skyrocketed in value from about $1,200 all the way up to $3,000 in the last 15 years. Okay, so as central banks increase their gold holdings, the value of gold continues to increase, right? As these bigger entities suck up the gold out there, there's less of it in circulation, which means the value is just naturally going to go up. So what's interesting is we have to look at this internally, right? In our own circumstances. The use of gold for individuals is very similar to the reason that countries use gold. Diversification. Okay, for individuals, what you will find is this diversification into gold has a very low correlation to stocks and bonds. And that's what you're looking for in a portfolio. The bigger your portfolio, the more savings you have, the better you're going to be able to diversify. So when we talk about stocks, buying Microsoft and Cisco and various different stocks. Yes, that's diversifying your risk of individual stock prices, but for the most part, stocks all generally have a good correlation with each other. So trying to diversify just with stocks doesn't work, and that's why people brought bonds in. Well, the longer interest rates stay low, the more the correlation of stocks and bonds. So we can't do that either. And so the holy grail of investing that's talked about a lot out there is really trying to find as many uncorrelated assets that you can invest in. And finding something that has a good growth pattern that's uncorrelated to the other things you're invested in is a big, huge plus. So right there is one of the first reasons. Countries do it for their diversification. People in their own investment portfolios do it for diversification. Now, safe haven from economic and geopolitical instability, long history of gold going up when things are falling apart. That's just the reality of it. Look what happened out of 2008. There's lots of precedents of this. 2018, we had a mini crash at the end of the year, started rocketing, and holy cow, then you hit the pandemic. We had a nice rocket launch, and then we've got instability out there again, and gold rockets. Hedge against inflation, we've talked about it. The reality is this is a currency diversifier. If the US currency is going through inflation, that means its buying power is being reduced, which means the currency itself is weakening. So having your money in something that's not a US dollar helps out quite a bit. Reduced reliance on the strength of the US dollar in that same example. And then the larger your portfolio, let me rephrase this. Here's the thing. If you have limited resources, investing in gold is not necessarily a great idea. Okay. So some people should be investing in gold. People that have larger portfolios, especially those that don't need to just access it constantly, they have chunks of their portfolio that they are investing for the long run. Gold is a great diversifier for that. So the larger your portfolio and the less you need to access your savings, the more you can own. Okay, so a lot of the big portfolio managers out there that manage the multi-million-dollar portfolios, the reality is you can allocate 5 to 10% of your portfolio to gold. And if you have, you've realized in that part of your portfolio quite the gains over the last 15 years or so. So it is very useful. It is a hedge for a lot of people's portfolios. There is good times and bad times. People got disenchanted by gold, owning gold through flat periods, but it grows in spurts, and there are lots of reasons that it's going to continue to grow, certainly for another few years or so. All right, everybody, hopefully that helps with a perspective on gold. Yourinvestmentcounselor.com. If you want to talk about this in person, you can set up a free meet and greet with me anytime, or anybody on our team, yourinvestmentcounselor.com, fpfeaz.org. I teach classes in full class form. They're about an hour and a half long over Zoom. Go to fpfeaz.org. It's a nonprofit organization I run, and I do that full education format. Different classes every single month, lots of choices on when to watch them. And then give us a call, smash that like button, share it with your friends, subscribe. We're putting on videos every single week. Love to see you next week. Have a good one.